what we're expecting in trade today.
Yeah.
We had a fairly decent day yesterday, Neeraj, all things considered, barring Kotak. It was not half bad, and the numbers which have come out since overnight are also fairly decent.
In fact, the March series as whole is also not done too badly. So I think there was participation, and we should be taking a little bit hard from that.
Oh, most certainly. I mean, the dips getting bought into, essentially every dip is getting bought into. But interestingly, yesterday, because somebody commented on Twitter as well, that, you know, that we were speaking about this possibility of a if the markets eclipse 500, then a swift call covering led up move, and that seems to be what happened yesterday amongst everything else, because there were very swift up move in the Nifty, partly led by the covering of calls, a significant call writing at 22,500, 22,600, and I think some bit of that got covered as well, which accelerated the move, if you will, in the second half of trade. The interesting thing is, could this month be a month of a bit of a risk off for this series?
Sell in May and go away used to be that old school
adage, right? No one is selling before June 4th.
No, but if you look at historical data,
Here's the data. So the data is that the expiry analysis suggests that FIs have decreased the long-short ratios and the positioning quite significantly on both the Nifty and single stock futures. So, by the way, the April rollovers, right, on Nifty index futures were 65.12%. That's way lower. The previous month was 69.7, if I'm not wrong. This is 65.2. So, clearly, people are not really going ahead and banking heavily on you know, making very large positions. I know Agam and Samina will talk about that, but this was one data. And, I mean, very likely, election volatility, don't want to take part in that. And FI positioning, the net shorts in index futures has come off. The long short ratio decreased from 0.81 to 0.62 index futures. And on single stock futures, FIs decreased their net longs from 448,000 contracts to 332 contracts this expiry. So expiry to expiry, rolls are lower, FI positioning is lower. People are clearly going into this series very light.
Also, just to put numbers to that, and why we say that the second half of the year, between May to October, usually sees a weaker market trend. May 2020, the Nifty was down 3.8%. May 2021, we were up 3%, so that wasn't too bad. May 2022, we were down 6.2%. And May 2023, we closed about 1% odd higher. So, but keeping that in mind, there is a little bit of a concern. Remember the long position of FIs, while you put a number to that, in Jan actually stood at 70%. So they've been declining gradually. And while the rollovers in this month look better than they did in April, they still are much lower than what we've seen.
Lower.
They're lower than what we've seen over the last 6 months, but I think they came in at what, 65%, if I'm not if I'm not
previous
wrong.
Month, Samina, was
3-month average is
71%, 71.4%.
And the 3-month average is about 76.8.
Yeah, so it's quite staggering as to what's happened out there.
Yeah, and now with this great news on GDP, we will have to only wait and see.
It's a little tight. It's a little tight, but you know, in the Indian context, and you know, that's what we're talking about this morning. It's I think results, corporate numbers will maybe take the forefront, of how stocks react.
So but just before we get to stocks, just on the trade setup, a couple of things that I wanted to highlight. One, Bank Nifty moving despite the Kotak downtick shows some inherent strength. Yes, but I'm just saying, because Axis, SBI, everything came to the fore. So Kotak being down 10% and yet the Bank Nifty doing what it is doing. Just wonder if a breather is around the corner somehow.
For Kotak?
Yeah, for the Bank Nifty at large. 6 days on a trot now. We've had a good run without any plausible reasons. Yes, Indocin might also add a little bit of a flavor, but it's not a heavyweight, so that is one. And two, just 3 buckets. We've been speaking about chemical stocks. Yesterday too, some of the chemical stocks, I mean, a Kotak report brought up Neogen Chemicals 12%. Today, Himadri numbers are good. I think Tamanna is going to speak about it. So, chemical, aluminum players, very keenly watched out for. The City Note on Vedanta speaks about that. And lastly, CDMO players have disappointed. The commentary from both Syngene and Laurus leaves a lot to be desired. I would reckon that the CDMO guys could actually see a bit of a downtick again today.
You're talking about sectors you want to watch out for this month. So chemicals, and I think we've talked about this over the last few days. Neeraj just mentioned that defense, banks, auto, could be ones you want to watch out for. Tech has had it quite rough. We've seen those in the earnings. There is no clarity, no indication of an improvement in the US deals or TCV. So tech may continue to be in a soft spot. Talking about rolls for banks specifically, the rollover for Bank Nifty dipped to 74.4% from previous month's average of about 87.2. The rollover cost members also decreased 0.4 as compared to the 3-month average of 0.9. So those are a few data points you want to keep in mind when you watch out for this market. A quick check on the implied Nifty and on the VIX index. Remember, the VIX has also had it quite wild in the last few days. It's actually looking pretty good. A 100-point gap up is what we are expecting. I'm not sure if that's how it's going to play out, but interesting. 100-point higher start would definitely mean some cheer for the street. Again, may open with a gap, but there is a good reason that you may see a little bit of selling emerging, because we've held out quite well. And sure, while the market remains buy the dip strategy, some profit taking cannot be ruled out at this stage. Let's quickly highlight for you a few stocks you want to watch out for. IT sector has disappointed with a whole host of weak earnings. You had LTI Mindtree yesterday, signed today, Emphasis, Tech Mahindra to add to that list. I'll highlight for you what Tech Mahindra did. Numbers were not too impressive. Clearly, what we are seeing is discretionary spend in the US is not picking up. TCVs are also under pressure. Conversion to revenue is the big challenge for most of the tech players. Revenues were down about 1.8%. Margins came in also down for Tech Mahindra at 4.9 versus 5.36. EBITDA was down 9% at 638 crores versus a fairly large Bloomberg estimate that was about 1,442 crores. Net profit was up 27%. At 664 crores. So that's what you have in terms of Tech Mahindra. Not great earnings. It'd be interesting to see how the markets react. Brokerages, though, haven't gone too aggressive in calling the shots on them, but largely not very impressed from what I've seen. Citi has clearly said they've got to sell on it. They've said it's another weak quarter, and they would be a little concerned. BFSI was up 3.5%, and the positive, of course, was that BFSI for this company has done well, but across negatives, deal TCV is actually down 35% YOY. Headcount is down 5%. There's softness in retail and transport, and the US continues to be a sore point for them. Along with that, you had L&T Technology. They reported numbers too. Their revenue was up about 4.7%. EBITDA was also up. Margins were down marginally by about 30 basis points, but I think the street might actually like what L&T Tech has reported, but we will come into that in a minute. Net profit is also up marginally, and they've also interestingly done a dividend, which is usual across tech players, of about 33 rupees a share. What was interesting is UTI Asset Management. On the face of it, these numbers actually look pretty good to me. But if you go through what the brokerages have to say, they don't seem very convinced about the kind of performance UTI has put out. Their total income was up 35.9%. Their net profit has also come in marginally higher at about 181 crores. AUMs have risen 19% YOY. But a couple of big brokerages have said that operational performance remains weak on this one. They said that their equity-oriented market share has compressed to 3.9% in March 24, 4.1% that was seen in the last few quarters. They've also recorded equity outflows, which was quite high at about 13 billion. And their SIP gross flows have also come down. While that is what the numbers are reflecting, if you look deep down, I'm not sure where the growth is then coming from, because if they've seen SIPs coming off, equity market share reducing.
Cost optimization, Samina.
So it's operational efficiency.
Operational efficiency that's helped the profits. But the SIP gross flows, you're right, have come off.
So that could be a concern. But I think it'd be interesting when the management comments on what the favorable yield mix is doing for them, because like I said, they look great. The stock has done really well in the last 1 week. But if it's only operational efficiency, you might want to look out at FY25 and be concerned, I'd imagine.
Yeah. For AMCs, just another point, and this is a story my colleague Saloni has also been reporting. This whole KYC business has really bothered them, not just in terms of compliance. They also see a possible impact on inflows. Remember, there are new KYC norms which kicked in from the 1st of April. And if you don't have those KYC norms in place, you can't actually put in more money. So they've written now, AMFI's written to SEBI saying, please fix this, because it's not only bad enough that people can't withdraw, but even inflows could get impacted. Now, having said that, a few more stocks we should watch. Kotak Mahindra Bank down nearly 10% yesterday, and that was expected after the RBI action played out. But you know what I found, I don't know if I should call it strange or definitely noteworthy, is last evening there was a tweet out from Kotak Mahindra Bank, first ascribed to their CEO Ashok Vaswani, which was essentially a message to customers saying, don't worry, everything will be fine, we'll fix what the issue is, everything will continue as per usual, which for current customers things don't really change. And then that tweet gets taken off, they put it back, but this time it is no longer from the CEO. It is just from Kotak Mahindra Bank. I thought that's quite strange, because if you're trying to quell concerns, why would you not own it? On the other hand, you haven't really seen any clear communication from the bank on, is there a timeline in which they're going to fix it? Just very, you know, broad kind of statements saying that we will fix everything shortly. So even in the letter to the employees, which we reported on NDTV Profit. So I think you could see continued pressure after the fall yesterday, which was an over 10% fall. Maybe at lower levels, you might see some clawback. But right now, Kotak Mahindra Bank may not have another good morning. But we'll, of course, wait and see how that pairs out. Bajaj Finance was the other one. In line, largely, the numbers in line, net interest income up 28% YOY. Remember, this was, in terms of compliance, also a bit of a challenging quarter for Bajaj Finance. The RBI had its own sort of, you know, regulatory action on small ticket loans. They had to provision higher, they had to change that mix, etc. So all things considered, operating profit up 25%, provisions as expected up 53%, and PAT was 21%. The management is cautiously optimistic on profitability. I was looking at the Citi note this morning. They've maintained a buy with a target price of 8675. So they see about a 19-20% upside. And the key point is exactly this, that earnings are in line with forecast despite being impacted by 4% due to regulatory restrictions. They've, of course, formally, and this is what the management said in the con call, they formally requested the RBI for a review and removal of product restrictions. Their FY25 guidance has also been trimmed, but nevertheless, I think Bajaj Finance might not see a very bad opening, and the numbers are largely in line. Interglobe was the other one I wanted to talk about, Indigo, and this was an important, though not very highlighted development yesterday, but definitely an important one. So Indigo, Interglobe Aviation, has effectively ordered 30 Airbus A350-900 aircraft. So this is their first venture into the wide-bodied aircraft. They have said they have a purchase right for an additional 70 Airbus A350s. So this bolsters their international presence. It's you know, portraying sort of a very positive outlook for the way the business is going when you're putting in an order to this extent. They've also inked a deal with Rolls-Royce for purchase of 60 Trent engines. So I think safe to say be prepared for a good move in Indigo this morning as well. So these were some of the first list of stocks that I was looking at.
And speaking of financials, by the way, IndusInd Bank would be the one that could actually give a bit of a support as well. Though this whole talk of how earnings continue to benefit from a utilization of the contingent provisions of 300 crores and the traction in retail deposits is missing. But the overall performance seemed okay. NI PAT growth of 15% YOY, loan growth at 5% QOQ. You can't really find too many faults with this. NIM stable at 4.26%. Moderation in slippages across segments. So in some sense, IndusInd Bank cast the near perfect picture. I would suspect because of the inherent strength on the bank Nifty, you would probably see IndusInd Bank as being one more strong stock in the session today. Let's wait and watch. Emphasis, and you'll hear the management talk to Sabina a bit later on in the show. Results were in line, maybe marginally lower, but the problem with Emphasis this quarter has been the total contract value signings. They call it TCV signings, which is the total contract value. And those signings were at $177 million only, which hints at a delayed recovery. Remember, this number at 177 is down 27% quarter on quarter. The 4-quarter average is actually 418 million. So the new deal signings are a bit off for Emphasis. Would be interesting to see how the stock reacts to this one. And Olectra Green Tech, for all the fanfare around order wins and the kind of valuations that Olectra trades at, it's an expensive stock, egregiously expensive stock, I might add. The revenues were down 23%, PAT was down 45%, margins down 136 basis points. Let's see if there's a bit of a negative reaction on this one. So these three kind of stood out for me in the session today, or for the session today.
Also, just a smaller one. I don't know whether you've got Som Distilleries on your radar. But quick reporting on that one. They've reported, a small company, but worth a mention, they've reported a profit of about 20 odd crores, which is about 26% higher than what they'd done last year. Revenues are also up substantially, about 51% to about 381 crores. Now, interesting because it's a small company. The stock has done exceptionally well in the last 1 month, and you may see it do quite well today as well. So, small company and hence a big move cannot be ruled out. Could be a trader.
Dawa is all working.
The things that are doing
Daru
well.
and dawa, both are working.
And milk.
दूध भी हाँ
दूध भी.
सुन देखा था हमने. So all this dairy intolerance, alcohol, all this healthy living is for I don't know who, the Americans.
Whatever you need, it all works.
There is an American coming up on the show, I believe.
Yeah, you should go to him quickly.
Aren't you talking to somebody from
Santosh.
on the US data
Global
points?
cues.
I don't know if Santosh wants to, but before I go to Santosh Rao, yes, and we are going to talk about global cues, just a couple of very quick stocks that I want to talk about. KPI Green, good numbers. Revenue up 58%. Remember, this is a company which has had a bumper order book, so that's why you're seeing those revenues up. But even EBITDA up 71%, margins 32% up. 32 versus 29, sorry, 236 pips up, and net profits at 35%. KPI Green might be fairly decent today. Tanla I'm just talking about Tanla because that stock moved
has
so
been,
much.
The last few years.
EBIT down 18%, margin down 321 bips, net profit down 7%. I want to see what happens with this stock
It might
today.
still open higher given its Tanla.
The kind of movement. So, the numbers are not great. So, I'm just curious to see what happens with Tanla. Himadri, I took because, specialty chemicals seems to be staging some kind of a comeback. And the EBITDA numbers looked good, 42% up, margins also up 300 pips, and net profits up 51%. So Himadri is something you should keep on your radar. Santosh Rao.
Just one quick, Tamanna, I just want to quickly highlight Zensar because we've highlighted all the tech companies. It'd be unfair to leave this one out. They've registered a profit of 173 crores, which is up 45% Y on Y. This is despite a muted top line. The reason you've seen a bump up on numbers is other income and improved operating margin. So you want to watch out for this one. The top line may be deceiving, but it's due to other income that we've seen a jump. So watch out for Zensar. Another one is Aavas Financiers. Smaller, but worth mentioning, 142 crores reported. They've grown 12.5% YOY, and the net interest income is also up 14% YOY. So this could see a positive move in today's day of trade as well.